here on Monday. Jack Barton, CCTV, Brussels.
For more on the Europe markets and the Eurozone recession and the trading blocs' many proposed bailouts, we go to New York to discuss EU with Vidak, CEO of Barrel Consulting Group, an investment research advisory firm. Vidak, thank you very much for joining us. And I guess, the first question is, all this doom and gloom talk, and the European markets and even the U.S. markets have been on quite a rally over the past couple of months. Can you help us understand why?
Yeah, good evening, Philip. I think there is, again, a disconnect between the market and the reality on the ground in Europe. Market works in a very funny way sometimes. Sometimes it overreaches and sometimes it goes the other way. So this week has been kind of very pivotal in European Eurozone, and the market has actually done extremely well. It's up 4% in Europe, which is the best week so far this year. So we're seeing this disconnect, but next week, more precisely on Tuesday, U.S. Congress will be coming back. So you will have to see what happens then. There's a potential that some fiscal discussions might derail this little, I would say, mini boom market in the last week or so.
Help us explain the relationship between confidence. We saw business confidence is on the move. It feels or seems like confidence here from investors is better because of the way the market's moving. Why does confidence matter so much to the markets?
Yeah, well, the market is really driven by greed and fear, and greed and fear talks about confidence. So Germany just came up with a 7-8 month high confidence. They basically came up with a much better number, not much better number, but a little bit slightly number than expected. But still, the equities have really rewarded that. As well as the imminent deal on Monday, it seems like Greece will finally get this tranche of $40+ billion, which is really needed for them to recapitalize the banks and to get this country going, because you have to remember half of youth in Greece is unemployed. They have a 25% unemployment. So this $40 billion, it's a small amount, but for Greeks, this is a big amount. And so I think for two reasons, for a PMI in China, fiscal cliff, as well as these two issues, Greece and Germany, has really driven this market up this week.
You mentioned Greece, obviously one of the areas that we're watching very closely. What happens if Greece does get the money, or I guess in a way if they don't, but what do the markets look forward to after that for next year?
Well, I believe Greece will get the money, and then the issue is really to fix the Greek problem forever. In other words, they have to come up with a prudent fiscal structure, and that fiscal structure needs to be policed. And this doesn't apply only to Greece. It applies also to Spain. It applies to Portugal. It applies to Slovenia. It applies to all the countries, poorer countries in the Eurozone group.
Besides Greece, what's the other big problem that we're looking at in Europe?
Well, we have a problem in Ireland. We have a problem in Slovenia. We have a problem in Portugal, and we have a problem in Spain. Spain is very interesting. We had 7% interest rates there on the 10-year bond, and now those interest rates came down to 5.5%. So Spain, in the eyes of investors, has made quite an improvement. It's just because the Draghi has basically promised that he will be starting buying the Spanish bonds. So we have the situation in Europe is very, very fragile, as we know still. But we will see what happens when January comes. I believe that the issue of Eurozone will be with us for many, many years until we get really something in place.
Vidak of Barrel Consulting Group, thank you so much for your time. Have a great weekend.